think it'd be like riding a bike, just falling apart. At least I was only like 3 minutes late. Very on brand. All right, you wonderful humans. We are back. Oh, man, there's a 50 banger right out of the gates. People want to know. They knew Sonder was going to come in his mock turtleneck, so that really packs the seats. As you can see, Logan, it is draped in our gorgeous Beluga Bash merch, which he took third place at, by the way, folks. Third place. Him and I. It's my dirty little pleasure of just.
I got a good draw.
Yeah, to be fair, you did get a good job, but you played well. We had some really good players there. I didn't know there was like a ranking system and all this stuff. We actually had like the top 2 guys the top 4 guys that played were actually very, very good. It was pretty crazy.
Former D1 tennis players. Yeah.
Yeah. Again, shout out. They sponsored. They had a really interesting. He was just so good. He was just really good. But pickleball aside, a few housekeeping. We have the Whaleys. If you haven't heard, that is February 1st and 2nd. Easiest way to think about it is the Oscars for D2C. So we are taking 2 days and 2 nights out of your schedule. And if you want to come on the 31st, there will be a welcome pre-party. You get to Austin on day 1. You get all the education in a really beautiful room. You get breakfast, you get lunch, and then we're renting out one of the best barbecue joints in the city called Lambert's. It's really cool. If you don't have a Whaley's wristband, you're not getting in. We bought out the whole restaurant, so it's going to be awesome. And then day 2, we have education. And then in the last part of the education event will be the Whaleys. We'll give away the 8 categories. And then we're having the black tie optional gala at one of the best ballrooms in the city, rooftop deck, open bar. It's going to be amazing. So if you want to go, hit me up. Just slide into my DMs. I'll get you a discount code if you want. But I think we have like 30, 40 more tickets left. The speaking circuit is incredible. And actually, I just slid into Harley, the Shopify Harley's DMs. So maybe we'll get him. But we got Moist, we got Sharma, we got a guy named Danny Duncan with almost 7 million subscribers, a bunch of incredible women speaking. It's going to be awesome. And then what else we got? Logan, on the product side, you guys launched Amazon, the long-awaited, highly touted. So people that have Amazon presence, you can now come over to the Whale app, or if you hadn't seen, you can now get more visibility into your whole business ecosystem with Amazon. You want to talk a little bit about that?
Yeah, I can't take credit for it, but the other folks on the team crushed it with that, worked really hard to put it together. It was probably like our second highest requested feature, right? We have a lot of people who are selling on Amazon as a secondary market. And so now you can come in, connect Amazon if you have it. You'll have access to like your sales there, any ad spend you have through Amazon as well. And so, yeah, I think it just helps blend all of your metrics together. If you had missing revenue or missing spend, anything like that, this is your way to kind of consolidate it and put it all together in one dashboard.
Yeah, amazing. We also launched our Refer a Friend program. So we still have our partners or affiliate program, but if you want something a little easier to sign up for, and you basically just get a link, you get to be enrolled in the Ocean of Awesomeness. So essentially what you'll do is for every time somebody buys using your link, you'll get $125 to spend at any of our Triple Whale stores. So, I mean, it's like 4,000 or 5,000 stores on there now, so you can pretty much find anything. But that's really cool. And then what else? I guess just shout out to Sonder too. He's doing this not from the beautiful enclave of Southern Utah, but you're all the way out in where are you? In Spain? You in Monaco, France? What do you went on the bougie circuit?
I'm in Venice. I'm in Venice today.
Oh my
just
God.
got done with Valencia.
Of course, this fucking guy, unbelievable. People out here living different. Me and Logan just shoveling mud while this guy's Mr. Worldwide, unbelievable. You probably went Delta One too, didn't you?
No
of course
comment.
he did. Of course he did. This guy.
My wife earned the trip. All right, she earned the trip.
Unbelievable.
Shout out to my wife.
I love it.
Unbelievable. Amazing. Carlos, what's up? Awesome. So I think what we'll do now is kind of pivot into the topics. And then also, if you guys have any questions about anything, let me know and just pop them into either the chat or the questions box. And we're happy to answer anything. There's just been so much going on. It feels like, feels good to be back though. First webinar of the year, had a couple missteps, forgot how to work the software and so on and so forth. But what I didn't forget is how important profit is. What's your take on profit, Logan? And then I want to hear you, Sonder, and then I'm going to give a little musings, and then we'll get into some technicals.
Yeah, I mean, I can only give like past experience. In the last company I was with, like before joining Triple Whale, while we were Triple Whale customers, we were an e-commerce brand doing somewhere. We did everywhere between 2 and 5 at the time, million a year, and we were small. So like profit was how the owner paid himself, and it's how we decided on how we are going to put money back into the business, what products we wanted to buy. Like even our bonuses were based off profits. So I think it's really important. I think maybe what I wanted to get across here today for anyone listening, I'm sure we have agency folks, sure we have brand owners and marketers. I just feel like it's very important for folks to understand where the business is at any given time from like a cash flow perspective. And we were different, but we were very close with our agency partners, and we're like, listen, like, yeah, we want you to manage our Facebook ads, but just so you know, like this profit number is important. We can't go upside down. Otherwise, no one has a job.
Yeah, I mean, I think that's spot on. I really like that because you're a bootstrap as well, right? You guys didn't take outside funding. Yeah, amazing.
No, yeah.
Sandy Sauce, what's your take on profit?
Yeah, I mean, I think, we obviously saw a pretty big shift away from profit for the last handful of years in the public market, and a lot of companies putting a lot of focus into growth, and then, more or less getting to profit once they had the right numbers. I think we saw that shift probably over the last 18 months. And then I think the private markets are starting to catch up more to that, looking more for profitable, sustainable companies. I think we tend to see a pretty healthy mix though in D2C, where you have a mix of bootstrap and private companies. So now I think everyone's kind of aligned though between bootstrapped and private, where now the focus is back on profit and sustainable businesses, and unit economics and all the marketing and MER and all those fun metrics. So I think that's been interesting to see that transition from growth back to profit.
Yeah, and I love what you said there, because for me it's obviously oversimplified, but that's ultimately what I think the job of the CEO is to figure out how those resources are deployed and at what end of the spectrum they want to be at in terms of growth or profit, because the CEO is going to be the only one that can really set the vision, and then that really reverberates throughout the organization. Because you're right, and two, there's certain things to be said as well where not as prevalent in, like, as you said, the D2C space. But there is something to be said when you are indexing on growth, because it might be an exit that is your goal or something like that. So I think the goal is really, always helpful to have in mind. But I agree with you guys that really in our sector and a lot of the people on the call where they're doing that kind of 1 to 50, 1 to 100 million, you really need to have a tight grasp on how much profit you can really pull out of this company, because that's the number one. You can read all the business books you want. It's as simple as the number one reason startups die is because they run out of money, whether the money gets too expensive and nobody wants to give it to them, or they just get over backwards on their terms. So I love it. Any questions so far? Anything like that? And then let's break out. I also love the word that you said. It's almost like you teed me up. There's a term called unit economics, and ultimately it's basically, if I sold one of this thing, what happens? So Dave Rekic shared a really cool, let me see if I can make this smaller so you guys can understand. So when people say unit economics, it's essentially saying like, okay, cool. If I sold one of these, what happens? And this is all kind of basically everything that goes into it. So you're going to have the pick and pack order. You're going to have the transaction fee, the shipping. You're going to have your product COGS or cost of goods sold. If you have any additional pick and pack fees, any additional shipping, and then the payment processing. Usually you don't add taxes in here. Taxes are just a really weird accounting beast because you get the money for them, but you really have to pay them back. So it's a weird, because they're actually like a liability. But anyways, so this is essentially what the unit economics looks like. And what I try and really promote in terms of paid media is really putting your high margin products, because you just have more for that. The other thing is when you're smaller, you can start to get a lot of things taken away from that margin because of your pick and pack fees or your shipping fees and stuff like that. So that's something that you really, really want to look at. And what I really like about Triple Whale, obviously I'm biased, but right now we don't have any native integrations, as Logan knows. We did have ShipStation for a little while, but there was just a lot of friction in terms of getting things to work perfectly. So right now what you can do is just add these custom expenses. And then depending on the reconcile date, whether it's a week, a month, what have you, this is what you would do. And you can see what your actually true net profit is. And again, as you start to get into more complex businesses, it might be difficult to use Triple Whale for this full-fledged, like to the penny profitability, but being able at least to see the gross profit level, and then you throw some shipping in there, I think is really valuable. But I've been rambling and talking like this whole time, I feel like. So Logan, Sonder, chime in. Let me know kind of where your head's at, what people should be thinking about, how should they be deploying their paid media, how should they be thinking about profit for their business?
Yeah, well, anyway, this thread, I guess you're talking about this worksheet here, but the thread from him, maybe share that separately.
Oh, yeah.
It was good. There's some things in there that I don't, not that I disagree with, but I think that our customers should think through, and they can do it like in very simplistic measures, like in Excel, right? So I think I'm always like on the keep it simple method. So let's talk through a couple of those things. One, in Triple Whale, I can't tell you how many customers I see that don't have custom expenses filled out and their net profit's not accurate. And I feel like that's a huge unlock in Triple Whale, being able to visualize that and see it on a day-to-day basis. So one thing for handling fees, shipping fees that are a little harder to understand, if you have a 3PL, try to download your order data and your information from the 3PL and try to get like a good little average percentage of shipping and handling fee per order. And then in custom expenses, you can set a variable expense. Let's say it's 4% of any order on average over the last 365 days. You can set that level at every order, and we'll calculate that into the custom expense, which goes into net profit. I guess, I don't know if Rob was about to show the custom expenses or not, but
yeah. So where'd I go? I go store, custom expenses, and then
variable
is
at the top there.
Add a variable expense.
Yeah. And so here, what you can do is type in category. The category could just be like shipping or 3PL, whatever you want to do. You can add your own categories here. And then I would set a metric against sales, and then do the percentage of how like on average. That's why I would use real data, but keep it simple. Like just download your orders, download your 3PL data, understand what percentage of sales went into shipping and handling. For example, like the packing fee, the processing, the actual shipping charges. You could put all that in here and get a pretty good estimate. The only time this is going to be really hard to do is if your AOVs are everywhere. Like if you're shipping a couch versus a lamp, that's a big difference. But I think for the most part, our customers have not single SKU, but similar AOV distributions, things like that. So that's one part. And then I know that's rambling. I just wanted to touch, if we end up talking about David's thread, think about areas, high margin products, number one. But two, I would think about other things that you can do to move the needle. And for me, I propose shipping thresholds, like the free shipping you could be offering could end up being $5 back in your pocket if you charge. Find out what that does to conversion rate. The other that people don't talk about enough is simply raising your price. And I know everyone has an adverse thought about that. Whoa, I don't want to increase my price. But my boss before pushed back on me for this. And he was like, listen, let's just move it $5 and let's see what happens. In my case, it turns out that a conversion rate didn't even move. And we made $5 more per order right off the bat. And it's like money right back in our pocket. So anyway, David's suggestion is more about like upsells and bundles. And I agree with that stuff too. It's just that like when you do the math on upsells, you really got to have a high percentage of conversion on the upsell for it to make a massive difference across the board. So anyway, those are my 2 cents. It took a long time to say.
No, I think you're spot on there, and I want to jump over to you, Sandra. But there was one question I had for you. What your preference for the variable expense is to essentially just get a guesstimation versus having to reconcile and add those shipping expenses to get the kind of to the dollar type of net profit? Is that your reasoning behind using variable expense versus me just I can go to my 3PL or whoever is doing all my fulfillment and say, hey, how much money did I spend this week, this month, what have you? And I can add that as a custom expense. You prefer the variable expense because of the automation, or?
Well, for two things. I mean, yeah, it is a matter of preference for sure. So I like the automation. I don't have to think about it too much afterwards. And it ensures my data is pretty correct on any given time period. I mean, close to correct. Otherwise, if I want the data to be correct every week, I've got to go find out what my charges were, upload that expense every week, every month. And so there's going to be any given day will not be very accurate because your shipping expenses aren't included. That's all I meant.
No, I'm tracking, but I guess what I'm just trying to say is like the only inaccuracy you would get would be between the update period, right? So it would only be a week off or 2 weeks.
If you want to do it every week.
But yeah. No, I'm tracking what you're saying. Yeah, that makes tons of sense. Okay, Sonder, pontificate. Give us the good. Oh, and then we'll get to your guys' questions as well. Sonder put them in here, but I just want to give Sonder some time to ruminate on profit and how he thinks it should be thought of in businesses.
I think this is good. I think with definitely some of the additions too we're bringing to the FinHub, I think it makes it even more powerful. So I think getting as many of your custom expenses into TripleWell is valuable. So you can see here on the summary page, your net profit will pull in accurately. I think some of the other metrics that, when you pulled up the custom expense, being able to add in marketing expenses as ad spend to be able to get a more accurate MER are some of the things that I like to use. So I definitely love to leverage that feature. It can be hard, right now if you're having to, use QuickBooks to reconcile what you're seeing in TripleWell and vice versa. So that's where a lot of the awesome work the team's doing on FinHub will just bring all that awesome sauce into TripleWell. So I think just more get those in here, and I think it just gives you a better picture into your marketing spend in dollars and what's actually happening.
Yeah, I love that. And just to make sure we're bringing everybody along, so there's 3 levels of profit on your P&L or your profit loss statement. There is gross profit, there's operating profit, and net profit. Gross profit is going to be essentially your variable cost. Some people take shipping out at the gross level, some people don't. It's a very D2C thing. Most people account for shipping in the operational level. But again, the D2C is kind of this weird, like to Logan's point, it does matter how much your shipping costs, and it can be a real boon or kind of drag on how much you can aggressively acquire people. Net margin is just essentially the same. Like net margin, contribution margin, and gross profit are kind of all same, but different. Contribution margin is essentially gross profit at the unit economic level is kind of the easiest way to explain it because it's all essentially the same representation. Net margin is just a percent, and then gross profit is just the absolute dollar. So make sure everybody's kind of just tracking with what we're talking about when we're, like I said, there's just making sure the specificity and the nomenclature is there. Okay, on to some questions. So Matt, we ended 2022 at a 16% MER marketing efficiency ratio. So that means 16% of ad sales or 16% of revenues were spent on ads. 2023 month to date, you've only had 11 days, but we're seeing a 32% MER. What are your averages? Are you guys seeing across brands? Let me see. I don't know what this guy, he has a pretty good. I haven't seen.
I can talk to that while you're pulling it up if you want, Robert.
Yeah. Go ahead, Sonder. Fill some time.
Yeah. So I meet with 2 to 3 customers per day, TripleWell customers. So tend to cover this metric quite a bit. I would say it definitely depends on goals. I would say those who are more focused on profit usually tend to be around like 10 to 15% marketing efficiency. Those who are kind of in the hybrid space where they do want some growth, but they still want profit, They usually are between that 15 to 20%. And then those who are more focused on acquiring new customers tend to be that 20% plus. Now, talking, more specific to your brand, it's very, very common for the marketing or MER to increase at the beginning of Q1. Obviously, consumers just spent a lot of money. Consumer spending just slows down overall. And so, I wouldn't be too concerned that your MER has doubled, this month compared to the past. I think it will average out over time, especially when you get into Q2, Q3, Q4. So it tends to be a very common theme, as far as those CPA costs, doubling right now, which obviously would have a direct correlation to your MER.
Yeah, I would echo all of that. And again, there's a few things going on there. One, you have to be cognizant of, or if you're acquiring people, like, do you have more acquisition intensity on the weekdays during the weekends? Because you really want to be looking at how many sale days you have throughout the month. If all days are created equal, then yeah, you have 11 days. But there's just some vectors that are verticals that don't convert well on weekends and vice versa. And so that's also how I'd be thinking about it when I'm doing kind of comparisons. But yeah, so 33%, that's a little spicy. But again, to Sander's point, it depends on kind of what the goals are. And the other thing is I would really want to see the whole spectrum of those three ROAS. Like 33% is semi-high, but again, it's not the end of the world, especially if you're bringing in a ton of new customer revenue, because then you're going to be able to, I'm assuming there's some sort of retention play here that you can get some more money back through LTV manifestation. But yeah, that was really well put, Sander. Anything to add, Logan?
No, just pay attention to your marketing mix, and if 32% is too rich for you, you can find that out by looking at your net profit, right? Like, are you okay taking a hit this month for the sake of LTV revenue that could come in February, March, and April? So look at your mix right now between where you're spending, what your CPAs are, your new customer acquisition, and then look at your new customer to returning customer split. Because right now, let's say you're 70-30 new to returning. Of course, MER is going to look I hate to say worse. It's just going to look worse than the last period potentially, because during Q4, you probably had a really heavy returning customer mix based on all the stuff you were doing for Black Friday, Cyber Monday, that kind of thing. So just keep that in mind. But I wouldn't go unprofitable this month if you don't typically see healthy LTV 60 and 90 metrics.
Yeah, well said. And that's another reason why I think POAS can be helpful as well. Like, if you're not going to hit your gross profit numbers, you're not going to hit your net profit numbers. Like, it's just how the math. Like, and so the more you can have at that gross profit level, making sure that POAS, which is essentially going to be the contribution margin, is at a level that's acceptable for you. That's a really nice heuristic / proxy to understand, are you putting the right dollar? Are you putting the dollars behind the right products that generate profit for the company? Because you can sell a ton of products that are low margin, and then if you're acquiring those people on those low margin products, yes, the MER is going to be there, and yes, the revenue is going to look great. But by the time you take out your COGS, by the time you take out the shipping, by the time you take out the pick and pack fee, it starts to become really, really svelte in terms of gross profit. And then if your gross profit number is small, like, there's going to be stuff at the operational layer that's going to eat things up, et cetera, et cetera. And there's not enough to kind of get spread around. Fantastic. Lucky, what a cool name. There's some action from Lucky. It looks like we got another question coming in. Let's see. What else? How else do you guys think that profit should be managed? I really loved what you talked about there, Logan, in terms of I think offer construction is something that's a bit right now, something that can be really helpful, where you can get more money instead of giving a discount, maybe bundle for an upsell, things of that nature, to really keep more of that money. Any other cool things that you've seen in the past or you've used in the past to really become profit focused versus revenue focused?
Yeah, on those notes, like increasing AOV, for example, we definitely tried bundles. We definitely tried increasing the price. I think with bundles, like my biggest disappointment was that I didn't do a good pro forma of it beforehand. And so I had this idea that like upsells were going to drive so much extra revenue to the business. But that's why I said like keep it simple. What I would suggest people do is like go look at your traffic to your site and your current conversion rate currently. So let's say you're driving, 100 users to the site and you have a 3% conversion. Well, only the people who are currently converting will likely convert on the upsell, right? And so only a small percentage of them will. So start to do the math against your current, like your current visitor metrics and your conversion metrics to understand what upsell, if converted on, what would that do to the entire business? And divide that new revenue, so the new AOV of those customers by all orders to really see what the lift is. Because what happened is really like for me, it only went up by like 50 cents per order because there's such a, like even if I have like a 20% conversion on the upsell, that's only 20% of those who converted on purchase, which is like 3 to 4%, right? Is that you following me there?
Yep. No, 100%. Yeah, I think that's clever.
Which is why raising the price drove such a high value for us, because the extra $5 didn't decrease my 3 to 4% conversion rate on the site. Right. I got $5 additionally per order.
Yep. No, I think that's
all I was getting at earlier. Yeah.
That makes a ton of sense to me. Something Sonder and I have talked about in the past, and I believe you have as well, is being able to quote unquote give away a really high margin product in conjunction to some sort of upsell, cross sell, something like that, where if you buy X or Y or Z amount, you get this, milk frother or something of that nature that is perceived as like $10 or $15 of value, but only costs you $1.50 or something like that. And so I think that's something that can also be really efficacious when you're trying to generate more profit. But at the end of the day, it's really just, it's almost like calories and losing weight. Like you just have to have more gross profit and keep your operations either lean, or you just need to make more money to support those operations. But at the end of the day, you just will never beat out your unit economics. Like it's just one of those natural laws.
Lucky thing you mentioned, I wanted to make sure, because that was a good point. I want people to understand how they could think about that a bit more granularly. Like, let's say that you had an interest in doing a bundle, right? And you were going to make a bundle in the sense that you're going to give away one of your current products with an order. Let's say you've decided that there's a couple of inputs here that I would suggest. One, understand what AOV threshold would make most sense, right? Decide, is that my entire catalog, right? So let's say I have a $100 shirt or I have a $100 pair of pants. Are they the same margin? Am I willing to give this product away with the pants and the shirt? So answer that. Then once you've figured that out, understand so now that new product you're going to give away has now become a variable expense. Okay. That's if it costs $1.50, that's an added $1.50 cost to every order that you get in the sale time period.
Right.
What you're hoping for at that point is that your lower CPA outweighs the additional cost of that product, right? Because you're hoping you can use that as a lever to improve your marketing efficiency in general. You want to acquire customers for less by giving them some sort of great promotion, and you're probably going to have some returning customers do it as well, which is fantastic. But just pay attention to that, because you want the gain from your new customer acquisition cost to be more than the added cost of giving the said product away with an order.
Yeah. Just to kind of say it back so people are really understanding what Logan's saying, because it's very important. And so, for example, if you sell a t-shirt and that t-shirt, you sell it for $25, make the math easy. $5 is your COGS for that t-shirt. You're going to take $20 in gross profit. If you can give somebody like a t-shirt bag or hanger or something like that, that say is listed on the site for $15 or something like that, but it only costs you $2 or something like that, you're only going to have a $2 increase in COGS or a negative $2 in an deduction in your gross profit. But if you sell another t-shirt, that's well worth the $13 net, if that makes sense, because you're going to get the $20 off of it. But anyways, really important stuff, really awesome stuff. This spreadsheet is actually really interesting as well. So what Logan's talking about, this is what Dave walks you through, and you just plug in all these numbers to really understand. Again, even though it's a bundle, you're looking at it as a unit, and then you can calculate the unit economics of that bundle. And to Logan's point, you can make a lot of money doing it the right way. Like, I think offer construction is going to be something that's going to be really pivotal right now, just because not every dollar is created equal. It just is what it is. Some products cost more to make, and all things being equal, if you are wanting to optimize on that profitability vector, you really need to make sure that you're looking at those gross margins.
Rob, we have a question in the question queue that Sonder put in there from, I believe it's Sharif. Sorry if I said that wrong.
Geez. Yeah. Let's do this.
And then I'll pop in Lucky. Lucky has not a question, but we'll come back to Lucky in a second because I think it's related to the first question we discussed.
Love it. Sharif, what's up, dude? Okay, so this is from Sharif. With profit in mind, where are you guys putting more focus over next 2 quarters? Increasing product selection or on increasing sales for current product selection? That's a really interesting question. You've been quiet, Sonder. You start, and then we'll go to you, Logan. It's a very good question.
Yeah, so Sharif added some additional context to this. I just couldn't fit it all in the question box. So with the product selection, he mentioned assuming they have product market fit for your current audience / clients.
Okay.
Or on the increasing sales, increasing sales, okay, for product selection, paid media buys to find new audiences, clients, etc. So, I mean, my scapegoat answers are always going to be around the data. And so for me, what I would be looking at historical is, and I probably would just look at more data in 2022 since 2020 and 2021 were such outliers. What do your cohort analysis look like for customers who came in during January, February, March, April, May, June? Usually what we tend to see are customers that come in Q1 don't perform as well as customers that come in through Q2. I think, some of the hypothesis there is Q2 customers, more recently bought from you, and, your Black Friday, Cyber Monday deals tend to be more attractive because they remember you. Now, once again, every business is different. So I think that's where the cohort data will actually tell you the right story. And so now if I am seeing great cohort data in my LTV section in Triplewell, then that's where I'm probably investing in new customer acquisition, just because costs do tend to go down right now across ad platforms because most people are pulling back. Now, if you're in like health and wellness, any supplements, that space right now is obviously your money month. So that's usually when they're increasing on that front. And then as far as increasing product selection, yeah, I think it's just that balance between, can you get your existing customers to buy, new products that you're bringing to market after they just bought, like Logan mentioned earlier in Q4. I think that's the hardest thing to juggle is, finding that right balance there. So I tend to focus a little bit more on new customer acquisition right now. Once again, your cohort will give you more of that data. Just so I'm not driving away email subscribers too much since I just bombarded them for 2 months straight. So that's how I would answer that.
Super strong take. What about you, Logan?
Yeah. I'm hoping that I understood it correctly. I was listening to Sonder. I'm also rereading the question, but we're talking about product expansion versus selling through current inventory, right? Or the decision to expand it all.
That's correct. And it has also been confirmed by Sharif in the chat. That is the correct interpretation.
Cool. All right. So I've worked at 2 companies where new products came out very fast. One was Chubby's, which I'm sure a lot of people know. The other was the last company I worked for, which
Kyle's speaking at the Whaleys. Not to cut you off, but
shout out. Right on.
Former
so everybody's
CEO
coming
of
to
Chubby's.
that. Kyle's a genius in my opinion. He's a super smart guy.
Yeah.
You don't want to miss that talk. All right, but at Chubby's, if you were a fan back in the day, they used to drop product every 60 days. I mean, maybe even faster, maybe every 30 days. And it led to a ton of growth, buzz, repeat purchases. People, it used to be kind of like a collector's thing where things would sell out so fast. Everybody wanted that pair of shorts. It was crazy. So if you can afford to invest money back into product, I do think that iterating will help a lot of things, because you can have new messaging to your current customers. You can go out and try to find new customers with a new not a category, but like a new product. Maybe they weren't interested in the first thing you had, but now they want the second thing you have. I think it'll just move the flywheel much faster by creating new products. I think just make sure they're cohesive together. But anyway, yeah, that's my opinion there. If you can afford, like, think about the money you have. Are you going to take debt out? Are you going to use your current money in the bank to bankroll this new product? But that's what I would do. And then the idea of selling through your current inventory, like, yes, do it. I guess my caveat there is, did you overbuy? Like, are you sitting on a ton of inventory that you're having trouble moving? If you're not having trouble moving it, then I would just continue with what's working, clear through that stuff, maybe even continue to keep it on the shelf. But then I would always back that up with new products, because I think that'll keep everything really fun and energetic, and keep existing customers coming back.
Yeah, I'm aligned with both of y'all. I think there does need to be a clarification, because I'm actually not aligned with creating new products. I think new products are really, one, dangerous, and two, big bets. What I do like is having core products with variants. So like when you're talking about Kyle creating new products, not to say that they didn't create new products, but a lot of times it was prints, right? Or like cuts and variants. It wasn't necessarily like
I see. You mean like, yeah, keeping it like a Yeti cup,
new
but
prints,
a Yeti blue,
new colors,
green.
these things of that nature, where you're not having to find new product market fit. You're essentially think of it like this, like flavors, right? Like different flavors, but it's the same core, and you can dress it up and do these different things where you're not necessarily having to commit to all of this R&D as well as inventory and try and find a new category creating product, which I think is great. It's awesome, but those are big bets. Whereas you can just instantly have this new velocity where you're dropping a new quote unquote product, but it's just an actual iteration of one of your top selling products. So if that's the case, I think that's a really interesting path to go down. Other than that, I think it makes a lot of sense to have a lot of workhorse products and see how you can sell through those. The other thing you're going to have to take into account is like, is it perishable? Whether that be it goes out of style, it's seasonal, or literally if you are selling some sort of food, like what's the quote unquote shelf life of this? And that'll also kind of impact your decision on do I need to sell this stuff out? Because there's something called product velocity, or just sell through velocity, like on average in terms of like forecasting. If I sell X amount of this, will I sell out through the year? And so this starts to get into some operational stuff, not necessarily marketing, but inventory management, of understanding how to satiate your demand. And ideally, depending on where you want to land and how much cash flow you really want to eat up, you want to have a certain level of product that you never want to have more, and you never want to have less of that. And you can start to modulate that. Like Tim Cook is arguably the master at this in logistics of like, Apple has X amount of inventory. It's usually like 1 or 2 weeks worth. Like it's so fine tuned, like and they very rarely run out. Like sometimes they'll run out just because there's a run on the bank, in terms of like what Logan was talking about, the new product drop, where Kyle would drop something and everybody just needed to have that. They wanted to be the chubby of the week on the Instagram page, like things of that nature. But it gets into some really interesting operational questions of like, how good are you at forecasting? How quick is the turnaround for the lead time of getting new product in? Because that's the other thing, is you don't want to be caught with your pants down, where you've used all this money to generate all this demand, and now you're telling people to sign up for a pre-order, or they might not get it for 2 or 3 months and things of that nature. So in a weird way, like it's kind of a cop-out answer, but I don't think there's a better thing for one or the other. I do think, to Saunders' point, that right now it might be better to sell through some of the inventory to get a little bit more cash flow flush, and then you can start to make some more moves, because the summer is usually a down period. But also, to Saunders' point, this is why cohorting can be really helpful, where you can see when people are really expensive and when they're not, and what their LTVs manifest at, because you might only want to acquire pretty heavily, or with paid media, 1 to 5 months out of the year, and the rest of the months you're kind of modulating around either product drops or things in that nature. So really, really great question, Sharif. Very, very smart. This isn't a question, but I thought it was really good to just, it doesn't format very nice on the question thing, but this was from excuse me,
See you,
Damon.
Sounder. I know Sounder's got
Bye,
a
Sounder.
piece
Thanks
out,
so
but
much, brother. Have fun.
Thank
This
you.
was
See you
from
guys.
Damon in response to Lucky Panda.
Oh.
Is that really your name? That's the coolest name ever, or is that just like a manifested name? Because that Lucky Panda is the coolest name I've ever heard. This is off the back of year to date, and again, I know that we all really want to be tight on our metrics, but you're only 11 days into the year, so I wouldn't extrapolate too much here. But 32% mirror, 74% new customers. Lucky, it might be interesting to see if you can, as Damon suggested, send more emails or SMS, because it sounds like depending on how long the business has been around, 74% new customers is pretty aggressive. There should be a little bit more retention plan on the back end, and then 8% net profit, which again isn't necessarily the best place to be in the world. So I think there's some retention play where if you can get those customers to get more money without having to acquire them, I think it makes a lot of sense. But really, really good stuff, Damon. That was a really great response. Appreciate that. What else we got? Okay. Love it, Sharif. And then Alfredo. Amazing. Oh, company name. It's still a fantastic company name. So that's amazing.
I'm
Let's see.
I'm going to put it in here, Rob, real quick.
In the question box?
Up on the,
okay, cool. Alfredo, this is a great question. What strategies do you recommend for increasing 30-day to 60-day LTV? So a few things here. Again, this is going to be a bit of a function of your business model, right? Like if you... So let's put some constraints around this. What do you think? Let's see. What is Lucky? Let me see what your business is, and we can use you guys. Oh my gosh, there's so many Lucky Pandas. Are you the kids store, or which one is this? Anyways, okay. Oh, amazing. Oh, what a beautiful website.
What is
this
it?
Is gorgeous.
Cool.
Lucky Panda Kids. You gotta get the little one some fits. Yeah, let's go. Let's do this. So, oh my gosh, this is awesome.
Cool.
Wow, this is beautiful. Okay, let's play CML, Logan. Lucky comes to us and says,
kids.
yeah. So Lucky comes to us and says, hey, I want to hire you guys. I need to increase my 30-day to 60-day LTV. That's what my client Alfredo wants. What answers are you giving to Alfredo?
Man, I'm trying to think of, I have a lot of ideas running through my head. I'm trying to think of things that are like low key easy, but I'll just throw out ideas and we can make them like, it's too hard to do. I would invest a little bit in some technology, or maybe you just do it through like forms. But like my wife is obsessed with kids' clothes, and we're always running out of clothes only because he's growing kind of fast, right?
Right.
Like imagine this world where you like my wife buys some clothes from you. First thing you do is send her an email. It's like, hey, listen, like, thanks so much like for buying this. We can't wait to see my son's name is Watts, like baby Watts, grow with us. What's his weight and size right now? And you could know like in 30 days, he's probably going to grow an extra half inch. He's going to gain maybe 2 or 3 pounds at max. Hey, listen, I got the next size up for you. I know that you liked this, recommend that. And say, I can send this to you right away. Click this button. We'll get you squared away. You could do some sort of subscription product where you'll make sure they're never out of clothes. Like every 30 days, we'll send you the next size up or half size, whatever it is. I mean, tactically, you want to make sure email and SMS are rolling. I would definitely think about how you can categorize product by style, and always recommend a style that's related to the original purchase or the last purchase, because that should have better conversion rates. Like if someone's buying like, of course, like don't recommend baby boy clothes to folks who bought girls. And then I think like you have amazing photography. It seems like if you could keep recommending cool photo shoots based on what other kids are doing in the ecosystem, that could lead to people converting on the next outfit for a photo opportunity. And then the calendar's big. Like my wife was taking a photo every month of our kid with his little sign, 1 month old, 2 month old, 3 month old. Each of those need an outfit, right? So you could set this up for them in a calendar and just say, here's our recommended 12-month outfit calendar. And that way they could just have it on order. Be like, hey, we'll go ahead and put this on subscription. We'll ship this to you each time. You can make sure the size is checked before we ship it to you. and you could have like what do you call those calendars? They're called something, but
Advent calendars.
yeah. It's like, hey, here's an outfit for each month. Well, while they grow.
I love that. So let's do, okay. That was a great, I'm going to do Lowly in the Sky now. These sites are beautiful, you guys. We have the best users ever. So for you, I would use some segmentation in post-purchase flows where if you bought, like, because you have a lot of really cool products here that bundle well together. So like, for example, if you bought the Fleur.BT21, those really cool flower shoes, in a week or something like that, I would send you an email, be like, hey, I hope you're enjoying your shoes, yada, yada, yada. Oh, by the way, we've found that everybody loves these shoes with this wallet that matches your shoes, and so on and so forth. And then you start to own essentially every part of that person's wardrobe. And so you really start to build it out. The other thing that you could do is also have, because you have their shoe size, so you can either send, if you need to do fire sales, or try and send some sort of, to Logan's point, how to style this. And so like, hey, here's some cool shirts or something like that that isn't even part of your brand or something, but just helping them become more fashionable. You also have perfume, so you can do a ton here. So the too long didn't read, Alfredo, is I would just build around, like, don't overcomplicate it, but maybe have like 5 to 10 conversion paths that you can walk down that are essentially little decision trees. And every purchase is essentially a trigger on that decision tree. And then you can kind of bring people along, whether that be through perfumes, through adding onto the outfits they got, to even gifting here. This is a beautiful site. So that's kind of where I would go with that. This is awesome though. Okay, your turn on the adults apparel, because now you won't have, as Sue candidly pointed out, they are not growing out of sizes unless they're getting fat like me. You're pretty much the same size. So what would you do for 30-60 day adults apparel? Is it kind of same but different, of like segmentation, upselling, or what are you thinking?
Yeah, well, I was in the apparel space before, and it was adults, so like people weren't growing out of it. For us, we had specific categories, so we did apparel for bands, right? So people were fans of either Grateful Dead or Fish or David Bowie,
Yep.
those kind of things.
Yep.
So we, like Rob has said, we had decision paths. Also, and this is all Klaviyo we were doing this through. So a lot of this is about email and SMS messaging. Now,
Yep.
sorry, I mean, one little back step here is if for some reason you don't have great conversion rates into people staying subscribed, there are some methods like Google retargeting. You could also do like some Facebook ads going towards the audience of people who've already purchased before. Just make sure you're keeping up with your acquisition costs there, but you can do that. Within 30, 60, 90 though, what we would focus on is sending people like-minded apparel items that were in conjunction to what they already purchased based on time of year. So seasonality was big. If we sold somebody a jacket right in January, like we kept everything very much like the winter collection through March. And then, by April through August, we were all summer stuff. So if you'd bought a Grateful Dead jacket in January, this is going beyond the 90-day, but like we had a better than likely not chance of converting you into the swim trunks come summer. Yep. So it wasn't like extremely fast to, I guess it wasn't exactly 30 or 60 days. But if you think somebody would want something else really quickly, I would stay within like the same category at first and see if you can't get them to rebuy things that are similar to what they originally bought.
Yeah, I love that. And something that I just had the epiphany of as well that I'm fairly bullish on. I think they're deprecating it a little bit on IG. But I think that, or the shops are still there. They're just deprecating some of the functionality. But I think playing around with some live shopping, the baby clothes are probably going to be a little more challenging for the live shopping because, having a little bundle of joy, like actually sit still for a camera, is probably going to be challenging. But the actual adult apparel could be really interesting. And the other thing is you could almost turn it into like a Stitch Fix style, like, hey, let me help you guys put some outfits together. Here's what looks good together. Boom, boom, boom. Buy these outfits, buy these bundles that we're showing you. And so you can kind of give people an aspirational, like, here's what it looks like, versus like the beautiful white backdrops. Like some people actually like to see what the actual piece of clothing will look like versus just seeing it in the, what is it called? Drop shot or the white back. I forget. There's a certain term where just on a blank backdrop. Yeah, exactly. Product backdrop. So I would play around with some live shopping. I think that could be really interesting, especially the shoes as well, because shoes can be, you can show the range of the shoes to also add value, where it's like you can dress them up, you can dress them down, you can wear them with jeans, you can wear them with skirts, you can wear them with these things. So that would be something that I would be very, very heavily into, especially too, because you can have a really nice ceiling on the cost where you just pay somebody X amount to host these, and then you just internalize that as marketing spend, and you can track how much comes through that. So I think that would be really interesting.
One other thing.
Thank you, Sue.
Yeah,
that's exactly what I was thinking about.
And for Sue, and I mean, I feel like the kids' clothes, it's close to me. So like, I know how much my wife just like impulse buys. I think if you can get permission to use other children's photos in your marketing materials, I'm sure you're already doing this, but like that would crush it for my wife. As soon as she sees some cute kid wearing an outfit, she's like, yep, my son's got to have that. On the adult side and the shoe side for Sue and for, or I guess Alfredo put Loli in the sky as well, or Lolly in the sky. I think from a marketing and merchandising standpoint, also build your calendar out really well based on other things that are happening completely outside of your brand, and like give people reasons to buy.
Smart.
You got Valentine's Day, Father's Day. There's going to be a day, like graduation for high school, graduation for college. I don't know. There's like a zillion different reasons why somebody needs a new whatever. And I would just like lean into that hard based on who your audience is.
That's a really good take. I like that take a lot. We have one more question, Logan, that I put in here.
Okay.
Oh, and Lucky's question as well. So let me do this one, and then we'll do Lucky's, and then we'll wrap it up. What are some strategies? And this is from, who put this in here? Coy, what are some strategies on retaining subscriptions? We have seen a bigger drop during the month of December and January for Mushroom Elixir Supplement Company, looking to retain more of our past subscribers. That's a great question. So I think the way I think of subscriptions versus purchases is a purchase I have to convince you every time to buy, where a subscription I just have to convince you not to cancel. And that might sound like semantics, but it's very, very different. It's essentially like a long-term relationship versus dating. Like every time a purchase, you have to convince that person to go on the date with you. Why is it fun to go on the date? Is this going to be what I want? Whereas a long-term relationship, there's kind of a presumption that you're together and you're going to already go on the date unless you do something like really, really dumb. So I would say for the subscription stuff, I would really lean heavily into community and lean heavily into ways you can make either the subscription be built on a habit they already have or built around a goal they're trying to achieve. And so with Mushroom Elixir, it could be some sort of meditation pathway where you host some meditations for the month and then you do your elixir before you do the meditation. It could be some sort of health thing that you wanted to become people in, but just making some sort of unified goal and people part of a purpose and a bigger group, I think is a really good way to start to ingrain those subscriptions. And then from there, you can just start to keep that same structure, but just replicate. And also to Logan's point, you can really have some really nice dovetailing with the calendar where you're not having to have these net new ideas. You're just building around what's in the cultural zeitgeist. But that would be my 2 cents. What are your thoughts, Logan?
No, I think that's great. I'm reading the message now that you've seen a bigger drop in the month of December and January for Mushroom Elixir. Yeah, I mean, with subscription too, especially around probably your category, you have to get customers in a habit forming period, or they have to build the habit within the period, right? So it's one company that's local to me that does a good job from the marketing standpoint. Here's something that they've helped me with the habit forming part. We moved from my wife and I moved from doing like ground coffee to like bean coffee. And so we bought from them, and then they have like a subscription where they'll send you coffee, but they send you all this great information, like these drip series emails that are like, here's how often you need to get new coffee. Here's how long the shelf life is of the beans truly. Here are some different ways you can grind the coffee. What does it mean to do it coarse? What does it mean to do it medium refined and those kind of things? And so it kind of gets you nerdy about it. It's like you're kind of excited for the next shipment because it's like could be a new flavor. It could be, it could just be that mine's going stale and they happen to deliver it right on time so that I have fresh coffee all the time. So I think pushing through with like customer stories or stories about your vertical, anything that helps the customer like get kind of nerd out on the things they're subscribing to you for, I believe will help. It's more content and like timely delivery, those kind of things for me.
Yeah, absolutely. I'm totally with you on that. Really, really well put. Amazing. Yeah, a membership is actually, it's funny because we were just talking about subscriptions. So Damon just put in the chat, using some sort of membership model for recurring revenue, I think could be really interesting. Yeah, cuts is a really good one. Yeah, that's actually really, really interesting. The other thing is, and I think Logan, you guys did a really good job of this at your previous role, was a lot of times if somebody finds like a cut or a fit that they really like, send them, emails after X or Y or Z days with other variants in that cut or fit, where it's just like, hey, because especially in males, I know that myself included, once I find like a certain thing, I'll usually buy like 3 or 4 or 5 colors in that same thing. So that could be something that is also interesting. Do you remember the coffee brand, Logan?
Oh yeah, it's a local one to me. It's called Methodical.
Oh, great name. Okay, folks, we're pushing up against it. Oh, Lucky, you had one more question. So Lucky had a question. Any upsell recommendation, reviews, UGC? What's reviews? Yacht Pose reviews, I think. Who else does reviews? Akendo's reviews. I don't really have any strong opinions. Upsells, AOV boost is decent. There's a few upsell stuff. We should actually, you know what? I'll put this to our content team and we'll get you guys a better, well-resourced answer. And I'll share it next week at next week's Whale webinar. And then
I think we need like even if it was like a Google sheet, I think it'd be awesome to sell or like put together a massive list of like the top reviewed apps in the e-commerce space across different categories. Brilliant. Because I think a lot of people ask us about what the best is for this or that.
I love that.
I know you said Zipify OC. I mean, I hear a ton of people using Zipify just from my side on the product side. I've heard Rebuy mentioned a lot, never used it exactly, but the one that I used was called Frequently Bought Together was the upsell app I used. I mean, I liked it. I think we had to do some customizations to make sure it fit the site, like for our aesthetic, but there is an out of the box option for sure.
Oh, I love that. Amazing. You all have been so incredible. Lucky, hit me up at Rob at Triple Whale with your size and address, and let's get you some swag. Koi, do the same thing. And then Damon, why don't you guys all, if you guys want some swag, hit me up. You give me the size and then the address you want it shipped to. This is one of my favorite parts of the week, just jamming with you all and hearing all of your guys' success and challenges and trying to, just make the world a better place by getting babies looking better, getting better shoes out in the world. That's something I can resonate with. So I really, really appreciate all of you. Logan, any parting words?
Come see me in Austin for the Whaleys.
Yes, great plug.
I'm already trying to pack my tux because Rob has said we're all dressing up on one of the nights, so I'm kind of excited for that. Black tie affair,
optional. Black tie optional.
Black tie optional. You know what? Can you drop the link for Impossible Labs? That's kind of a neat thing for people to get involved in.
I totally forgot about that. Yeah. Absolutely. Let me do that. Nice.
Something else I'm really excited about. Oh, go ahead.
Go ahead. Pitch Impossible Labs. So I don't know if everybody knew about this.
Yeah, well, I mean, right now we kind of have an objective in the company. Like we've always moved fast and we want to continue moving fast. But I think it's over the next like 6-7 weeks, we plan on dropping like a new feature. And Impossible Labs, this landing page, you can put your email in and we'll like notify you like each time we're getting ready to launch something new. And so you kind of be the first person our first group of people to know that it's available in the app for you, or there'll be ways that you have to get access, like, message customer service, and we'll enable it for your account. So there's some really cool things there. We just launched, of course, Amazon. We have a ton more coming, right? And one of those is something I'm in charge of, and the other that I'm really excited of, that I'm not excited about, but I'm not in charge of, is our like CDP product. So if anybody's used to like using Klaviyo to build audience segments, you're going to be able to do that in Triple Whale. And my favorite aspect of it is that you can actually visualize how much LTV and predicted revenue is going to come from that segment, and like how it's growing. So that's one thing that Klaviyo didn't do a good job of, in my opinion, was I never knew like how many people are leaving or joining my VIP segment. But now you'll be able to like build that segment on your own, and then you can see how many people are joining VIP over time.
I love that. That is super exciting stuff. Impossible Labs, go check it out. Very, very cool. We're dropping more and more stuff. We also have a cool initiative starting the 24th. So not yet, but just to put it on your guys' radar. I know we're 4 minutes over, so I'll wrap it up after this. Is going to be Ocean Hours. So much like when you went to university, you could go see your professor for office hours. We're doing that every Tuesday. I have to get the exact time. I believe it's going to be 12 p.m. Eastern. And that's going to be with Sander, Alejandro, and Raquel. And you can jump in and ask any questions whenever. They'll just be in there sitting for an hour every week, so you can ask any sort of questions. Marina, this would be a perfect example where you could just pop in on a Tuesday and ask them all sorts of questions, have them help you sign up with variable costs. And what's really cool about it is they can actually take you into a private breakout room, and you can interact with them in a more intimate manner. Obviously, you guys know about Whale Mail. Everybody should be subscribed, but for whatever reason, if you're not, it's triplewhale.com/whale mail. And then, yeah, like Logan said, the Whaleys, February 1st and 2nd. We love you guys. And so, you know what? Because you guys are so amazing, let's not share this code, but we love y'all. Here is, if you use that discount code at the Whaleys, that'll get you half off the ticket. So hope to see everybody there. I think there's about 30 tickets left. And then lastly, if you can't make the Whaleys, we'd love for you to send in your nominations. You can get nominations right on thewhaleys.com. All right, folks, 6 minutes over. I'm so sorry for that, but we love you all. Thank you for joining us. We'll see you next Wednesday. Thanks again, Logan. Really appreciate the answers, man. Your big brain is always welcomed.
Yeah, thanks for having me. Appreciate it, guys.
Bye, everybody.